Hello everyone. Welcome to Bytes Special from INR Bonds post RBI policy meeting. As expected, RBI left interest rates unchanged, and there are key takeaways from the policy meeting documents where RBI stated that they're gonna keep the repo rate unchanged at 6.5% and also left the STF and MSF rates unchanged at 6.75%, all as expected. And they also reiterated that MPC committee objective is of achieving inflation target of 4%, while they would like to keep the growth of GDP growth rate forecast at 7% for the year. So given this, RBI wants to control the inflation and have that comfort of having the inflation at the lower end of the targeted level of 4%, while also keeping the economy growing at a rate of 7%. Given this robust economy growth and in the budget, government said that they're gonna borrow lower the next financial year compared to the current financial year. Leaves the RBI to be in a comfortable zone, and also they want to bring the financial stability to the markets and controlling the core inflation. But however, in the October 2023, we saw the inflation touching down at 4.9% and eventually picking up to 5.7% because of the food inflation factors. They expect the food inflation to give it inflation trajectory for this year and also they would keep the repo rate as the tool to control and maintain that stability, the core inflation. And how this is going to impact the bond market is currently the gsec prices are slightly lower than the today's opening levels, and the 10-year gsec is at 707 and 5-year gsec is at 703, and the longer end of the curve have seen some price rally. On the equity front, Sensex and Nifty are sharply down, and INR is traded on flat to slightly positive note. And coming in the corporate bond space, we expect the yields to remain elevated as the liquidity is going to get tighter, and as we expect the no rate cuts anytime soon in this year, so the liquidity will remain tighter, and the corporate bond market, where all the issuers will come to tap the market with more issuances, will keep the yields elevated, and not expecting any fall in bond yields in corporate bond space. On the overall yield curve front, we expect the yield curve to flatten out further, especially the longer end bonds to outperform the shorter end. Where we have clearly seen post budget 2053, the gsec or 2073, the bonds are outperforming the 10-year or the 14-year gsecs. And also, please note that the disclaimer is investment in debt securities or municipal debt securities and secured debt instruments are subject to risk, including the delay or default in payment. Read all the offer documents carefully. And if you're planning to invest in GSECs or corporate bonds, the best place for you is to hop onto the SEBI registered OBBP platform of INR bonds is Quick Invest, where you can place bids for both primary and secondary markets as well. Thank you for listening in. Do subscribe to our YouTube channel to get timely updates. Thank you.